Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with the 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
Well, I am ready, already, for the 3-day weekend, which I know a lot of people are already on vacation, will not be hearing the show. That is okay. It's very popular. Take the Friday off. When you got Monday off, you get a 4-day vacation. I understand it. But I am here. I'm also working on other things as well. That's like the funny thing about the real estate business is that you really don't have, I mean, you can take off, but somebody calls you and says, I need a pre-approval letter, then you're going to be working. That's the way it works. So, yeah, we'll see. Maybe I'll have a 3-day weekend. Maybe I'll have a no-day weekend. We will see what happens here. But we may have something to be smiling about as we enter the 3-day weekend because we actually got some positive movement in rates. I was very upset I couldn't do a show on Thursday because Wednesday we had one of the best days, I don't know, maybe in May, in all honesty. Might have been the best day. And I couldn't do a show. I got slammed with work. Couldn't do one. Real world gets in the way sometimes. So I'm going to have to bring that joyfulness here to this Friday show. I mean, not only is it a Friday show, which is always fun. We got a 3-day weekend. And like I said, rates are down. They are down. I was thinking that we might see a slight reversal on Thursday, and we did not. Rates are unchanged. So the gains that we got on Wednesday are holding. We'll see what happens on today. We'll see. But yeah, we got some positive movement. Why? Because of Iran. Even though I think on Tuesday's show, I was joking about how, or Wednesday's show, I was like, oh, look at this. There's been no movement in Iran. Nothing's happening. There's been no positive movement whatsoever. And the immediate next day, we got positive movement. So I don't know. Maybe the story was planted. I have no idea. But we got some positive movement. That was good news for the markets. And we're still hearing good things on Thursday. So rates fell. And then they held under 4 points. I almost said under 6%, under 4.6%. So the 10-year ended Thursday, 4.57%. And then the 30-year fixed index, according to Mortgage News Daily, was down 2 basis points to 6.65%. So improvement. I think we were 6 3/4 at the end of Tuesday. So Wednesday and Thursday, not bad. Keep our fingers crossed for what's going to be happening on Friday and hope that talks keep happening with Iran to move things forward. So what happened besides what is going on in the Middle East? Well, on Thursday, we did get a mixed residential construction report that I actually think was mostly good. If you look at the data, it was actually mostly good. And then speaking of builders, we did see some legislation move out of the House that's supposed to help and bring about more home building because that's what we need. We're underbuilt, right? What are the numbers? Anywhere from 1 million to like 10 million. But what's funny is that no one says we're overbuilt. No one's like, oh, we got too many houses now. No. No one's saying that. So we're still underbuilt. We are still underbuilt. And so we need to be encouraging builders to move. So where are we right now with regards to construction? According to the U.S. Census Bureau, we had building permits. That's the word I was looking for. Building permits climbed to a seasonally adjusted annual rate of 1.442 million. That was up almost 6% from March and was the third highest level in the past year. So not too shabby. Housing completions also in positive territory, rising almost 5%, up to 1.449 million. The second best reading set September. And then the only category in the red was housing starts, falling almost 3%. But the second strongest month for housing this last year. So basically what happened was we saw a big jump in housing starts in April. So we saw a slight pullback in May, but we saw a jump in building permits and housing completions. So I would say, for the most part, pretty good. Pretty good residential construction report. Building is still happening. This is despite the fact that even in April, I mean, we'll see what the May numbers are with, rates jumping up. But even with rates rising in April, still strong construction numbers. So pretty good. I will take it. And like I said, this coming out after the passage of a housing bill in the House that was passed overwhelmingly, 396 to 13. So pretty strong, especially nowadays to get numbers like that. So what did the House version have in it? One thing that I actually am not a fan of, the House bill would prohibit groups who own more than 350 homes from purchasing additional single-family homes. So this is something that's really popped up since COVID, when home prices were just gangbusters, right? I mean, people were submitting offers 100,000 over ask. I mean, just crazy numbers. And all of a sudden, this sort of myth started rising on the internet, mostly through bad interpretation of data, where people didn't I remember there was one report where they said 33% of all home purchases were by corporations. And I was like, what? There's no way that's correct. I mean, just so you know, I mean, corporate landlords, people that own 350 houses or more, make up less than 1% of home ownership in this country. Less than 1%. So I was like, 33% in one quarter. Well, I had to dig through 5 articles, because every article kept linking back to another article. And it went back finally to an article that said that, that number was actually people who were buying homes to flip in the second quarter of 2024 or 23. So just people buying homes to flip, 33% of them were corporate landlords. Well, that's kind of a lot different. And they even issued a correction saying they misinterpreted the data, but the speed of light on the internet, that story went viral. It was all over the place. Everyone was quoting it. Like the famous quote, right, about how a lie gets halfway around the world before truth can put its pants on. And so, yeah, I mean, I had to go through, I think it was five or six articles before I found the actual stat. And it turned out that stat was wrong. And that's happened before. People misinterpreting data, just not understanding where the original data was from. But so it's become this boogeyman. It's that's the reason home prices are so high. It's no, the home prices are high because we don't have enough. I mean, it's supply and demand. That's how it works, right? If you have X amount of demand and supply is too low, then prices are going to rise. If you have too much supply, same demand, prices fall. It's not rocket science. And so if home prices are too high, then you don't have enough of them. If you want to lower home prices, build more. It's that easy. But no, now so we got to get rid of corporations. That's going to solve all of our, it's not going to solve anything. Like I said, they own less than 1%. I think it's less than 0.1%. It's so crazy of a number. It's not going to have any impact. And what's funny is that the one places where corporations probably aren't buying is, the COVID markets that went extremely hot, because corporations aren't going to overpay for homes. I mean, they have a balance sheet. They have numbers. They figured everything out. And they're like, this is what we can pay for a house. They're not going to overbid. They're not going to get into a bidding war. They're like, this is what we can pay. If it's more, we're not going to get it. So all the craziness, a lot of it didn't even involve corporations. This is corporate landlords. But that's what happens. Myths exist for a reason. Boogeymen exist for a reason. And, you can't talk people out of it, unfortunately. But here are some other good things that were in the bill that I actually did like. Environmental reviews for infill housing projects would be streamlined, make it easier for people to rejuvenate neighborhoods. Communities could receive grants to develop pattern books of pre-approved home designs that would require fewer approvals. Once again, another process to make it easier to build. And that's what we got to do. I mean, make it easier and cheaper for builders to build. So then, therefore, they can use the money they have on, better, inputs. So they're wasting all their money on, regulatory reviews and having to file all kinds of paperwork with the local government, trying to get permits and everything else. Yeah, it's not good. It's either going to make it not affordable, or they're going to try to find a way to make that money up somewhere else. And so I'd rather have builders be using the best products, the best wood, the best concrete, the best everything. And I know people are going to say, Tyler, they're never going to do that. Even if you give them the benefit, they're just going to pocket that money. They might, but some people might just make better homes with that money. But let's just make it easier to build. That's my point. Make it easier to build. So this bill's not perfect. Nothing ever is in government, but it's I guess better than it could be. I don't like when the government says, this person can buy, that person can't buy. That never ends well. But like I said, you're never going to get perfect in government. All right. Also so we got building permits. The residential construction report came out. One of the other reports that we got out on Thursday was the Philly Fed looking at manufacturing in Philadelphia. It was not good. In fact, saw a pretty big drop. So the latest Federal Reserve Bank of Philadelphia's Manufacturing Business Outlook survey showed the diffusion index for current general activity plunged from 26.7 to negative 0.4. Way bigger than they were expecting. They were expecting it to fall into single digits, and this thing fell into negative territory. Activity weakened broadly across the report. The shipments index dropped 29 points to just under 5, while the new orders index tumbled 35 points to negative 1.7. That's the weakest reading since last April. Remember what happened in April last year? Liberation Day. Nearly 23% of firms reported improving conditions, while an equal share reported declines. That's why we're sort of in that kind of zero territory. The employment index improved slightly, but remained in negative territory at negative 2.8, marking its third contraction in the past 4 months. And then, not surprisingly, price pressures eased modestly, but remained elevated. Prices paid index fell 11 points to 47.9, still well above the long-run non-recession averages. And nearly half of respondents said they anticipate cost increases in the near future, and 75% of those firms expect competitors to raise prices as well. So they are expecting somewhat inflationary impact to prices. But yeah, big drop there. And usually that'd be a great thing. That's actually maybe what kept rates down. I mean, that's in negative territory. Manufacturing starts the show slow. Good thing we're almost done. It's a sign of weakening in the economy. So there you go. Here's one thing that scared me yesterday. The Federal Open Market Committee minutes came out, and it was a little worrying. According to the minutes, quote, a majority of participants highlighted that some policy firming would likely become appropriate if inflation were to continue to run persistently above 2%. And that's why you saw some Fed officials who wanted to remove the language on the idea that the next move would be a rate cut, because they're thinking that we could see some tightening. Not necessarily a rate increase, but they may be able to use some of their other tools to not have an increase. But their argument is that there is going to be a next move based on these possible pressures. It would be a rate hike. And so that was not good news yesterday. That came out on Wednesday. And yet that was the same day that we saw rates tumble. So I was like, I'm glad the markets kind of ignored this report. The vast majority of officials noted increased concern that inflation could take longer to return to the Fed's 2% target rate than previously expected. So they are still not necessarily expecting inflation to jump, but even if it doesn't, they're expecting it's going to be longer before we get back to that 2% target. On the labor market, officials generally viewed the labor market as stable. Most policymakers said recent data on unemployment, layoffs, hiring, and labor force growth suggest conditions have stabilized and are likely to remain steady in the near term, but did see a possible downside risk. Fed officials continue to describe the broader economy as resilient, with participants generally observing that economic activity appears to be expanding at a solid pace and expect GDP growth to remain firm this year. So overall, they expect good things with the economy. They're concerned a little bit about the labor market, but they're seeing a lot of strength. And they're worried about inflation. And even if we don't get a jump, prices staying elevated is a very real possibility. So not a great report about what's happening, the discussions at the Fed. Not great. But luckily the market's kind of ignored it. And then worst headline ever for us as we head into the 3-day weekend. Hopefully people will miss this. Wall Street Journal. Mortgage rates hit a 9-month high in below to prime time. Or prime buying season. Ugh. I mean, they're not wrong. But I just hate when people see that headline. They go, oh, I'm not going to buy now. When really it's not that big of, I mean, it is a big deal. I mean, your payment's going to be higher. But yeah, it just sucks. That's all I got. All right, you guys enjoy your 3-day weekend. If you've already taken a 4-1, then you're probably not listening to the show. So we'll be back Wednesday then. Yes, because we won't be here Monday, so we won't be doing a Tuesday show. So we'll be back for a Wednesday edition of Wilmington Mortgage. And remember, as always, do not wait, no matter what rates are. Do not wait. You buy real estate. You buy real estate and wait.